welcome. I'm Pallavi Sharma, and you're watching Money Magic with ET now. Today, we'll be talking about tax savings under both new tax regime and old tax regime, what instruments you can invest in, which deductions you can claim under which section of the Income Tax Act. And for this, we are joined by CA Sakchi today. Hi, Sakshi, how are you doing?
I am good. Thank you. How about you?
I'm good. I'm good. So, without any further delay, I would like to start with the first question. So, we have two tax regimes, old tax regime and the new tax regime. We can opt for anything. We would like to ask you what is better for who? Like, what are the benefits under the old tax regime and in the new tax regime? Which one should I choose first?
So yes, definitely people are very confused. Do they need to go for the old tax regime or the new tax regime? So there's not a specific answer to this. This would actually depend on the deduction and the exemptions that you can actually claim in the old tax regime. While it is said कि if your income is up to rupees 7 lakh, then definitely new tax regime would be beneficial for you since you will have to pay no tax up to rupees 7 lakhs in the new tax regime. But if you're a salaried person, then even if your income is up to rupees 7 lakh 50,000, you can still go for the new tax regime because you will get a deduction of rupees 50,000, standard deduction of rupees 50,000. And after that, you can claim a rebate under section 87A. If your deductions are up to rupees 1,50,000, it is generally seen that the new tax regime will be beneficial for you. But if the deductions exceed rupees 3,75,000, then the old tax regime would be beneficial. But if the deduction lies between 1,50,000 and 3,75,000, then we'll have to calculate the taxes both on the new tax regime and the old tax new and the old tax regime, and then need to decide which tax is beneficial for us.
So now everybody is saying that invest in tax saving instruments, invest here, invest in NPS and everything. But I wanted to ask, what are these instruments, and how much of the tax can I save using these instruments, and should I actually invest in them?
Yes, definitely. You should invest in these. See, there are a lot of tax saving instruments. Some very common ones are PPF, then there's NPS, there's NSC. After that, there's Sukanya Samriddhi scheme. There are also some equity linked mutual funds which can be claimed as deduction under Section 80C. So there's a quite a long list of instruments that help us to claim a deduction under Section 80C. So, talking about how much tax we can save, we'll just take an example. Suppose your gross total income is 10 lakhs, and then you claim a deduction under Section 80C for rupees 1,50,000. Then we have 80D, where you claim a deduction for the health insurance. Let's take it as rupees 75,000. And then we also have 80CCD 1B for NPS, that's 50,000. So the total deduction will amount to rupees around 2,75,000. And if we calculate the tax on the basis of old tax regime, then these deductions would help us to reduce our taxes by around rupees 57,000. So definitely these instruments will help us to save our tax, and also actually these will inculcate investment habits in ourselves.
Okay. So when is the right time to actually invest in these instruments? Say if I see this interview and I want to now invest in the tax saving instrument, so when can I get the deduction for this?
Uh, you can invest in these instruments anytime during the year. Like if you invest before 31st March, you will be able to claim the deductions in this assessment year as well, as in the
Okay.
assessment year 24-25.
Okay. All right. Now all these deductions are for the old tax regime, right?
Hmm.
Yeah. So I also wanted to know, apart from ATC, there are other sections as well where you can actually claim deductions, and not many people know about it. So, what are these sections, and what deductions can I claim from it?
Okay. Yes. See, first is ATC. The other one we'll go in order. So the other one is ATCCC. So in ATCCC, we can claim a deduction for annuity pension plans. Other than that, there's ATCCD, and there's three subsections to this, which are ATCCD1, ATCCD1B, and ATCCD2. ATCCD is basically for pension plans like National Pension Scheme, Atal Pension Yojana, and everything. So ATCCD 1 and 1B are for the employee contribution or contribution by the self-employed people. And 80CCD2 is for the employer's contribution. And then there's 80D. We can claim a deduction for purchasing of health insurance, but there's a limit for every section. If we consider 80C, individually there's a cap of rupees 1,50,000. But see, there's also one more cap which includes 80C, 80CCD1, and 80CCC. All these three together will help us to get a deduction of rupees up to rupees 1,50,000. Other than that, we can claim additional deduction of rupees 50,000 for 80CCD 1B. And then there's a limit for health insurance as well. Like for individuals, if they purchase a health insurance for themselves, their spouse, and their dependent children, then the deduction is up to rupees 25,000. If they take the deduction for their parents whose age is above 60 years, then they can claim a deduction of up to rupees 50,000. Same is applicable. The same limit of 50,000 is applicable if their age exceeds 60 years. So based on that, they can claim a deduction from their total income.
Now, coming to the new tax regime, Sakshi. Now, all this is for the old tax regime. I wanted to know what are the deductions that one can claim if they have opted for the new tax regime.
Most of the deductions are there, around 70 to 80 deductions and exemptions which are available in the old tax regime, but they're not available in the new tax regime.
Yeah.
So one deduction that you can claim, one is the standard deduction for salary, which you can claim in the new tax regime as well. And then there's 80CCD2, which you can claim, which is pension scheme, the employer's contribution. You can't claim 80C, 80D, 80CCD1, 1B, but 80CCD2 you can claim, and then the standard deduction.
So, say I'm a trader, I invest in stock markets. Now, I also have to pay capital gains tax. So, is there any way I can save some capital gains tax there?
Yes, there is a series of section which is called Section 54. So there we can claim exemptions from long-term capital gain.
Okay.
See, there's a section, Section 54 EC. In that, if we sell any long-term asset and we invest that amount into bonds like IRFC or REC, there are 3-4 bonds for this, then we can claim a deduction on our long-term capital gain. But that exemption is limited to up to rupees 50 lakhs. Other than that, there's also a section called 54F where you can claim a deduction under long-term capital gain for sale of anything other than residential house property. In that, we can use our sale proceeds to buy a house, which can be 1 year before the sale or 2 years after the sale, or it can also be that we can also use that to build a house after 3 years of sale. So that can help us to claim a deduction from exemption from our long-term capital gain. Recently, government has put a cap to that also, which is rupees 10 crores.
Coming to house owners, Sakshi, say I have purchased a house and I have also taken a loan for that house. So how can I save my taxes under the new tax and old tax regime as well?
So there's a section under income tax, that is section 24, that helps us to take an deduction for the interest we pay on the housing loan. So there's no limit for the interest deduction under new tax regime and old tax regime, both the taxes for rental house property. But in case we have taken a loan and we are living and that house property is self-occupied, then in the old tax regime, we used to get a deduction of up to rupees 2 lakh for the interest payment, but that deduction is not available in the new tax regime.
All right, that was the last question. Thank you so much, Sakshi, for joining with us. Hope our viewers are taking a note of all the information that you have given about tax savings. It has been a great session. Thank you so much for helping us out with our tax saving.
Thank you so much. Thank you so much for having me here. I really hope the users find some value.
If you like this video, then like, share and subscribe to ET Now.